Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 29th of May, 2022. And yesterday we produced our Gold and Silver Weekly Update. And this is essentially a repeat of that video under a different thumbnail and heading. Last week we saw gold and silver rise. At the same time, we saw equity markets surge, even though cryptocurrencies actually fell back. We look today at what happened last week, and we also take a look and extrapolate what we believe is going to happen this coming week, especially bearing in mind there is a plethora of important economic data coming out of the United States, including the all-important non-farm payrolls report, which is due on Friday. So without further ado, let's take a look at this past and coming week. Gold rose $7 last week, rising from $1,846 to $1,853, having hit a high of $1,870 and a low of $1,842. In sterling terms, gold finished the week at £1,468, down £10, and in euros it closed at €1,727, that's down €21. Silver rose 37 cents. Rising from $21.78 to $22.15, having hit a high of $22.47 and a low of $21.68. In sterling terms, silver closed at £17.54, up 10 pence on the week, and in euros it closed at 20.63 euros. That's actually unchanged in euro terms. The gold to silver ratio fell from 84.7 to 1 to 83.7 to 1. Now, looking at the price prediction we made last week, we stated, quote, "So this coming week we're expecting to see gold trade between 1775 and 1875, with 1750 and 1900 as outliers, and we forecast silver will trade between $20.50 and $22.50, with 20 to 23 as outliers." Well, both gold and silver traded within our normal trading range. The difference between gold's high and low was $28, compared with the previous week's $60, and silver's difference was 79 cents, compared with the previous week's difference of $1.24, which itself was a smaller difference than the week before that. So really, the price movement of gold and silver this past week has been pretty uneventful. Now, looking at some of the other financials, Bitcoin fell $698 and currently stands at $28,772. Now, the equity markets have experienced good news. That is, if you're invested in shares, of course. The Dow Jones closed on Friday at 33,212, up 575 points on the day, and up 1,950 points on the week. The S&P 500 closed at 4,158, up 100 points on the day and up 257 points on the week. And the Nasdaq Composite closed at 12,131, up 390 points on the day and up 777 points on the week. So all in all, a good week for equities. Looking at oils, however, they're up. Brent crude closed at $119.43. That's up $6.88 on the week. And WTI crude closed at $115.07, and that's up $4.79 on the week. Looking at the dollar index, that's currently 101.64. That's down 1.51 points. And that follows the previous week's fall of 1.41 points. And to a large extent, this explains the dramatic rise in equities this past week. Now, looking at last week's economic data, and for those who listened into last week's update, we stated that Friday would be the most important day for markets, and it certainly proved to be the case. Why? Because on Friday we had the PCE figures, with PCE inflation for April coming in at 0.2%, compared with March's 0.9%. And core PCE inflation was steady at 0.3%. Now, PCE inflation year over year fell from 6.6 to 6.3, and that's notable. Real consumer spending was 0.2% higher than at March at 0.7%. Now, these had a dramatic impact on the dollar and equities as a whole. Taking a look at what's coming up this coming week, there's nothing scheduled for Memorial Day, but then on Tuesday we have the Chicago PMI for May and the Consumer Confidence Index for May. Wednesday, the S&P Final Manufacturing PMI and the ISM Manufacturing Index, both for May. Construction spending for April and motor vehicle sales for May, so a reasonable amount of data there. Thursday, we have the ADP employment report, as well as the weekly jobless claims and factory orders for April. And then on Friday, the all-important non-farm payrolls for May, which will also include the unemployment and average earnings. And we also have the S&P Final Services PMI and the ISM Services PMI or Index for May. So a lot of data, a number of important days this week, culminating in a trophy level of data on Friday. Now, in our view, it's important to bear in mind a number of factors, because you will hear a lot of talking heads now talking about inflation's rate of increases going down. The central bank will not, therefore, be as aggressive in their interest rate policy and their quantitative easing clawbacks as they have been, and this is why equities have started to fly. Well, we have to bear in mind that whilst the inflation rate of increase has decelerated, it's still going up, and especially in the food sector, which obviously then affects lower income families the most, and to a large degree spending. We must also not forget that large parts of China are still in lockdown because of COVID resurgence, and also the Russia-Ukraine war is continuing to impact supply chains and cause bottlenecks. Very short term, the lower PCE figures has caused the US dollar to fall, as analysts are beginning to think that perhaps the Fed will not be so hawkish in the coming rounds of interest rate rises, and there could even be a pause in the Fed rate tightening cycle. We suspect, however, that the Fed will still remain hawkish in its next round of interest rate rises, and possibly the one in July as well, because they like to see 3 months of data before changing perspective. Now, we could be wrong, but we're still expecting some not so tasty medicine in the weeks ahead. Looking at gold and silver from a technical point of view, we can see that support for gold exists at the 10-day moving average of $1,842 and strong support at the psychological $1,800 level. And resistance stands at the 50-day moving average of 1901, which again is where the psychological resistance of $1,900 rests. Short and medium-term momentums have turned positive, suggesting higher prices, while the MACD has a negative trajectory, which suggests lower prices ahead. As far as silver is concerned, it is broadly affected similarly to gold at this stage. Technically, support is seen at the 10-day moving average of $21.84 and resistance at May the 6th high of $22.60. In silver's case, both short and medium-term momentums are positive, and the MACD is suggesting higher prices. So as far as analysts are concerned, we should see a slight uptick in prices. But this has also to be weighed up against the Fed's almost certain intention of raising rates by 0.5% this month and potentially next month too. If they do not do that, however, we could see gold and silver prices rise higher. So in our view, what can we really expect to happen to gold and silver? Well, this coming week, we expect gold to trade between really $1,800 and $1,900, with $1,775 and $1,925 as outliers. There could be some reasonable movements in our view towards the end of the week, depending on how the figures pan out. We forecast silver will trade between $21.50 and $23, with $21 to $23.50 as outliers. What do you think? How do you feel prices will fare? Please share your thoughts. Now, before we close this video, we're very conscious of the fact that over the last couple of weeks there have only been 1 or 2 videos produced each week. That will change in the near future as we're adopting some changes to the channel. However, I'm not quite in a position to announce those changes yet, but we assure you that we will be focusing on investments as a whole when those changes take place, and will adopt a much more on-camera view rather than just a voiceover. So please bear with us while we effect these changes. They will happen upon really our return from holiday towards the end of June. So stick with us. We think you'll be excited by what you see. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And as always, we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.